Hey, and welcome back to another video here at FiscalVoyage. My name is Felix, and in today's video we're going to do something a little different. We're going to talk about Kevin O'Leary's top 10 holdings for his AllShares ETF company. So Kevin O'Leary has an investment ETF called AllShares, and AllShares has 4 different ETFs funds. And in today's video, we're going to go over the OUSA fund, which is a high quality dividend type fund. And we're going to go over the top 10 holdings for this fund and look at them and see why is it that he exactly owns these shares. But before we get started, if you're new to the channel, make sure you hit that subscribe button, and as well check out my free ebook in the description below. So here's Kevin O'Leary's ETF website, allshares.com. For those of you who don't know who Kevin O'Leary is, he is the man from ABC Shark Tank and CNBC as an investor who demands quality, performance, and limited risk. AllShares, this fund management company, has created a series of innovative ETFs that fit his investment philosophy. Anyone who's seen him in ABC Shark Tank knows that he is a disciplined investor who wants to see entrepreneurs and other investors succeed. And when he invests for the long term and focus on quality. So let's look at the top 10 companies that the AllShares fund management owns. So first off, AllShares has about 4 different ETFs. So we're going to look at the OUSA ETF, which is AllShares US Quality Dividend ETF. And most of the shares of this ETF, as you can see here, is in healthcare, information technology, and consumer staples. And then rounding off the rest, industries, consumers, discretionary communication services, financials, utilities, and 0.09% in cash. So here's the top 10 of his holdings for this AllShare ETF. So the first one in the list is Microsoft Corp, ticker symbol MSFT. If we look at Microsoft, you can see here the company over the past year has increased 58%. PE currently at 34, so looks to be overvalued based on the PE multiple. Has a current yield of 1.1 or 1.01, and the dividends, the company has been growing dividends for 17 years. A compound growth rate of 10.45 and a payout ratio of only 34-35%. So overall, Microsoft looks to be a solid dividend growth company. So the next company on the list, Home Depot, ticker symbol HD. So you can see here, Home Depot has a 22% increase for the year, or year to date, not year to date, but for the 1 year chart. PE at 25 looks to be a high PE ratio. Dividend yield at 2.09. The dividends, Home Depot has been growing dividends for 11 years with a 5-year growth rate of 23.68 and a current dividend payout ratio at 52.78. So another good high quality dividend growth stock here for the AllShares. The third dividend growth stock, Johnson & Johnson, ticker symbol JMJ. You can see here for the 1 year term has been up 15.62%. Currently, it looks to be fairly valued at 19.24 PE and a yield at 2.66. The dividend history is outstanding, 58 years of dividend growth, a 6.32% 5-year dividend growth rate, and a payout ratio of only 51%. So not only you have a decent payout ratio, but the dividend's been growing for 58 years at a nice, decent rate. Overall, Johnson & Johnson, another high-quality dividend growth stock. Fourth on the list, Procter Gamble, ticker symbol PG. AllShares own 4.5% of this stock in its portfolio. Procter Gamble is up 19% in a year period. PE at 26 looks to be high here. However, has a decent dividend yield at 2.19. The company has been growing dividends at an outstanding rate of 64 years. The 5-year growth rate is low at 3.13. The payout ratio is decent at 58%, but overall, Procter & Gamble is another high-quality, safe investment dividend growth stock. Fifth on the list is Merck & Co. Ticker symbol MRK, is a healthcare company, and this company has 4.18% of the portfolio for AllShares in the OUSA index fund ETF. As you can see here, the company has grown think it's pretty flat, or negative 4.72% for the past year. The PE does look attractive at 14. Dividend yields are very attractive at 3.04. The company has been growing dividends at a decent rate of 5% and a dividend growth rate of 10 years with a payout ratio of only 42. So another high quality healthcare company here in Merck. The sixth company in AllShares ETF OUSA is Verizon Communication, ticker symbol VZ. Again, is the communication service industry. This company owns 4.01% in the portfolio of AllShares. Right now, the company is flat for the 1 year time period. PE looks attractive at 12.5. A very nice high dividend yield at 4.21. The company has been growing dividends for 7 consecutive years. Very low dividend growth rate of 2.51, but a very safe dividend payout ratio of 52%. Overall, again, another high quality, safe dividend growth stock in Verizon. The seventh company, Pfizer, a healthcare sector company, ticker symbol PFE. This company is 3% of its holdings in AllShares, OUSA ETF. Currently, for the 1 year period, is up slightly, almost 2%. The PE is attractive at 12.8 with a nice dividend yield at 4.13. The company has been growing dividends for 10 consecutive years. 5 year growth rate at 6.7. That's an attractive growth rate, double the rate of inflation. The payout ratio is safe at 52.83, and this is forward looking, so that's very attractive there as well. Overall, Pfizer, a healthcare company, a very high quality company, and a dividend growth company as well. The eighth company here on the list is Apple Inc., ticker symbol AAPL. Is, of course, you guys pretty heard of Apple. Is an information technology sector company, and AllShares owns 3.15% in its portfolio in Apple shares. Apple for the 1 year period is up 110%. Currently, the PE is at 38. Forward looking, so that is quite expensive there for 38 times earnings. The dividend is very low at 0.66% yield. However, the dividend growth rate is outstanding. It's been growing dividends for 8 years and has a growth rate of 10.5% for the past 5 year average, and a very low payout ratio of 25.25. So not only do you have a safe dividend with a great payout ratio, but this growing dividend at a very nice rate. However, it does look to be expensive at current prices. But overall, information technology company, a very high quality company in the AllShares ETF. The ninth company, Cisco System, another information technology company in that sector, ticker symbol CSCO. Currently 2.76% of the portfolio of AllShares OUSA. For the 1 year, the company Cisco is down negative 13.3%. However, this presents a nice attractive opportunity. I actually made a video on Cisco. Currently has a PE of 13.13 and a very nice yield of 3.57. If we look at the dividend history and the dividend payout ratio only 46.86%. 5 year growth rate of 13.27, and a 9 years dividend growth rate of or been growing dividends for 9 years with a growth rate of 13.27. So it has a nice dividend yield with a nice dividend growth rate. Makes this company very attractive with a low PE ratio. So this is actually a buy at current prices. I made a video of that a few weeks ago. Make sure to check that out. But overall, a safe, high quality information technology stock. And then last but not least, Lockheed Martin, ticker symbol LMT, is an industrial sector, actually in the defense sector. AllShares owns 2.5% of it in its portfolio. Lockheed Martin is about up 2% for the year in the year time period. A PE ratio of 16, so it's an attractive PE actually. I actually bought shares last month of Lockheed Martin, so I'm very happy with that. Current yield at 2.67%. And they just increased the dividend 8% earlier this month. This dividend growth rate or dividend growth years is 2 years, but I think that's an error here. 5 year growth rate of 10.39 and a payout ratio of 43%. So this is an attractive, high quality, very high quality dividend growth stock in Lockheed Martin Corporation. I could definitely see why OShares own shares of this company. So there you have it. Those were the top 10 companies that OShare for the ETF OUSA holds. I personally own 7 out of the top 10, so I'm very happy that I have a majority of those top 10 that he currently owns. So again, these are high quality dividend growth stocks. Some of them look to be overvalued currently, like Microsoft and Apple and Home Depot. But overall, all of them are very high quality companies, and they should definitely be on your watch list. Some of the undervalued ones in this top 10 was Cisco and Lockheed Martin and Pfizer. So I hope you guys enjoyed the video. Again, if you're new to the channel, make sure you hit that subscribe button, as well as check out my free ebook in the description below. And I'll see you guys in tomorrow's video.